Good morning. How are you? I hope you are okay. The trading cyborg is also very okay. Alright, we are two now. We are two in the live stream. Good morning, guys. Good morning. Good morning once again. We are three. This is good. This is very, very good. This is very, very, very good. We are four. Give me a thumbs up if you can hear me. Okay. So on YouTube we have one person, and then on Facebook we have 6 people. All right, we can begin today's work, and we shall begin today's work by going over yesterday's work. So yesterday was a very tough day. Oh my God. So yesterday we had expectations, but as we all know that expectations are the roots of disappointment. Wow, that's a very good line. Expectations are the roots of all disappointments in this world. So the more you expect, the more disappointed you are going to be when the outcome does not match your expectations. Okay? So in trading, it is good to have expectations, I don't deny. But those expectations should be accompanied by a stop loss to hold you in case things don't go as you have planned. Okay? So losses have the ability to this is what happens if you are not very acquainted with losses, or if your psychology has not yet developed to a level that you can take losses and come back tomorrow. It means that you as a trader have attached your identity to losses. You have also attached your identity to winners. So both of those two things are going to affect you. Now imagine living such kind of a life. It is like a bipolar person. Do you know what bipolar is? So a bipolar person, a bipolar disorder. So a bipolar disorder is a chronic mental health condition which causes extreme mood swings, which range from high energy to deep depression. Okay? So that is the life of a trader who has internalized, or who associates his wins and losses with his identity. So you start to view yourself as a winner when you lose and you win, and as a loser when you win. Okay? And that is very, very dangerous for a trader. For any serious trader, that is very, very dangerous. So to detach from your losses, the first thing I'm going to tell you is that you have to go through the fire. That is experience. whether you like it or not, you have to go through the experience and then finally come to view losses as cost of doing business. That is why in trading, even when we are expecting, because we have to have expectations are human. We expect that at this point, especially if you have goals, you expect that at this point in 6 months I will have done this. I expect that by the end of the month I will have made 20%. I expect that at the end of the month I will have withdrawn such and such percent. But those expectations have to be accompanied by a stop loss. It is not okay, it is not bad to have expectations, but all your expectations in the markets have to be accompanied by a requisite stop loss. So without a stop loss, you, my friend, the 6 of you here, and the 2 of you, there are 2 people watching me on YouTube. Very nice. In 1 year there will be 3,000. And on Facebook I'm going to have at least 1,000 also watching me in 1 year. But for now we have 6 people and 2 people. So what I'm telling you, right, 8 people now. So what I'm telling you is, yesterday on GBPUSD, we, or those people who were with me on live, saw me analyze GBPUSD markets in the morning. We failed to take a trade. Then in the evening, during NFP, we took that trade and we ended up losing, primarily because of NFP. So I don't know why NFP occurred yesterday, but it is what it is. So now, after taking that loss, of course it was not a very nice loss. Taking a loss is usually uncomfortable or sad, to say the least, but you have to prepare for these occurrences on a daily basis. Even talking about it right now, it is removing that loss from my head. Now I'm not going to think about it anymore. So we are now on today's chart, GBPUSD again. So our buyers for yesterday was simple. So on GBPUSD right now, you can see we have several marked lines. The first line is up there. The second line is below the up one, and then we have the bottom line. Okay, now our anticipation was simple and clear. We wanted price, so we wanted for price to come and fill this fair value gap here and then continue rising. But did the price do that? No, it never did that. So instead, it pierced through our stop loss and then came and touched and or rather filled this simple fair value gap in the 1 hour time frame. So right now we are operating in the 1 hour time frame. 1 hour time frame. Remember, I told you one thing. When we have begun this session, that it is good to have expectations, but your expectations must be protected by a stop loss. So our stop loss saved us yesterday. That is why we are here back at it again. So price came and filled this fair value gap easily and very well. Now it is currently at that level. And we are waiting for the next step. Okay? So my bias as of yesterday was that price or GBPUSD, since it has broken this high, so it has broken the high of Monday. It has broken the high of Monday. So since price had broken the high of Monday, Now our next step was to buy. So this is the 1 hour time frame. Right now I have no bias. That is the truth. I have no bias. Okay, I have no bias right now. So the only thing I can see today is that price is reacting off this level. So it failed to close above this very significant OB, because this OB is what we had waited for price to close above. Okay, so that is the reason why I don't have a bias, because my bias was a buy. Okay, it was a buy, it's a long-term buy, so that is my bias. But now, based on what price is doing right now, and based on yesterday's occurrences, my wish is that you also maintain your patience, because in the long run we will get a clear signal of what we want. We'll get a clear signal and we're going to go in very easily. So price came and filled this fair value gap, and still remember what I told you, that this level which price is reacting from has created a one very weak OB. So a weak OB is a combination of a strong, so a weak bullish order block, a weak bearish order block is a combination of a strong bull candle and several bear candles. You cannot compare that order block to this order block here, where the bull candle is smaller than the bear candle. So this is an indication of a, forget even today's candle, look at the past 2 days candle. So we have this candle, then we have this candle, then we have this candle. So 3 candles, 3 scandalous candles, 3 scandalous candles. So there are 3 scandalous candles. Now when you have 3 candles waiting for you to when you have 3 candles, the first thing you have to ask yourself is, am I buying, am I selling, or am I waiting? Because in all your trades, in all the trades you're going to take, you have to ask yourself that question on a daily basis. So now we will break this, we'll go step by step until we find a solution. But right now I'm not looking for a signal. Right now I just want to understand the market sentiment. So to understand the market sentiment, the first thing we can check is what we call my FX book. So you go to my FX book, my FX book sentiment. So Google my FX book sentiment. So when you Google my FX book sentiment, my FX book will give you a list of what people are trading. Okay? Now it is your choice, it is your opinion, it is your wish. And the way we interpret my FX book sentiments is we as traders, we take trades against the majority. So the least majority will give us a clue of what next. For example, if majority of traders, for example on GBPUSD, you can see, I don't know that you guys can see this. These are secrets I'm stealing for you. My God. Alright. Alright. Give me some thumbs up. Give me some thumbs up before I spill these secrets. Some thumbs up. If you can hear me loud and clear, some thumbs up. Thumbs up, my friends. Thumbs up. Alright, so to remove that confusion, what I do, or what I try to, how I investigate it is using my FX book sentiment. So my FX book right now, if you look at it keenly, if you look at my FX book keenly, you'll see something very funny, that GBPUSD, 18% of traders are currently trading GBPUSD. So of all the total retail volume, 18% are trading GBPUSD. Are we together to that point? Are we together? So are we together? Now, out of all the traders who are trading GBPUSD, 48% are short, 52% are long. Now, you tell me, as an intelligent trader, are you going to be in that market? No. Answer me, please. If you are trading GBPUSD right now, and you are me, you are trading Cyborg, okay? Will you take, based on the information we have right now from my, and you know, this information is updated every hour, every second it is being updated. Okay? So, if 52% of traders are long GBPUSD and 48% are short, can you go in that trade? No. Why? Because we have to have something which is going to, for example, Euro AUD. Alright, let us check Euro AUD, and then we shall go into the charts, and then we try to understand it better. So this is a secret tool I'm giving you, the 6 of you only. Only the 6 of you are hearing these secrets right now. And you should also hide yourself so that other people cannot hear you, because this is information which is available to the public, but many don't know, because many don't want to go further and deeper. Now, when you look at a pair like Euro AUD, you find that 16% of traders are short and 84% of all traders are long. That means if you want to move away from the crowd, what should you be trading? What direction should you be in right now for Euro AUD? Don't even think about the technicals. Based on the information I'm giving you, what side do you think you should be in? If 16% are short and 84% are long, what level do you think you should be in? Think about it for 5 seconds. So if you're a serious trader, okay? If you're a serious trader, okay? If you're a serious trader, you have to always go against the majority. And the majority are saying that, oh, we are trying to buy the bottoms. Oh, we are long. Only the few are short. And as you can see, look keenly. First of all, remember we said that the daily time frame is what gives us the bias. or the trend, if you want to call it like that. So we have trend, we have bias. So the overall trend is seen in the daily time frame, and in our daily time frame right now we can clearly see that Euro AUD has been selling. So let me ask you a simple question. Why are majority of traders going long? What is wrong with traders? What goes in the minds of traders? You know, sometimes we lose on purpose. Okay? We lose on purpose because why? Okay, look at Euro USD. On Euro USD, 60% are short, but 39% are long. Let me tell you another thing. If a trade or if a pair does not look like Euro AUD, then I don't want to trade it. I want the margin. I want the margin of shorts and long traders to be so big, like in Euro USD, that when I go inside or when I go to take that trade, I am not only confident, I am confident that I can even add some other positions. But if a pair, now before you get confused, I want you to understand one thing, my dear trader, that in trading we have 4 types of analysis. We have technical analysis, we have fundamental analysis or fundamental analysis based on depending on your English teacher, and then we have sentimental analysis. So sentimental analysis is how traders trade based on how are they feeling about the market. And the best way to get the sentiment is coming to my FX book. You just Google my FX book sentiments and it is going to take you there. So right now we are doing something called sentimental analysis. Sentimental analysis. Sentimental analysis. So if majority of traders are going short, so if Euro AUD has given us signals of it going short, then why would we in our ignorance try to go long? Why? If GBPUSD is not very sure about us, so GBPUSD does not know whether it wants to be in a relationship with us or not, so it's at the center. Now, would you commit to such a pair right now? Answer yourself. No. Same case for Euro USD. So this is 60-40. So 60-40, 50-40, no 50-50. That's not a strong correlation. I want something like 16-80, 20-80, or USD card 26-74 at least. So this is very interesting. I had not even seen this. So USD card, 74% of all retail traders. So this is a breakdown of what all three retail traders are trading right now. So if 74% of retail is long, then we should be looking for shorts. Okay? It means that whatever longs or whatever shorts happened, price was just recalibrating. price was just recalibrating. For example, look at this pair. Look at this pair, very easy. This is Audi JPY, AUD JPY, or the Australian dollar versus the Japanese yen. If you look closely, Audi JPY. Just a minute. So this analysis is usually very important because it gives me it helps me wait for trades, and I don't go rushing in to take useless trades which are not going to help me in any way. What? So right now I'm keeping off from USD, Euro USD, because they are matching. Then GBPUSD 48%, they are also matching. Imagine, look at this, look at USD JPY. Look at USD JPY. That we have 51% shorts and 49% longs. Okay, so once you have such kind of scenario, I think now you are beginning to understand. Now, once you have this kind of scenarios which are not quite favorable, you have two options. Number one, you can go to the other pairs. There are very many pairs. Okay. Number two, which is what I do always, I go direct to I use the 4-hour time frame. So let us check Euro AUD. Euro AUD. So you go to Euro AUD. Then you can also check AUD. So it seems AUD, or the Australian dollar, is providing a lot of opportunities, because if you look at a pair like AUD card, you will find that 87% of all traders are short, but 13% are long. What is AUD card? So as AUD, as the Australian dollar is buying, some are selling it, are trying to sell it. They are trying to look for tops where there are no tops. Okay, so right now for GBPUSD and all those USD pairs, because you can see they are not very favorable right now. Okay, I like being in a pair which is easy to trade and it is not confused. So if 61% of people are short and 39% of people are long, yes, we could say that long is the ultimate. Okay, so even for GBPUSD, but we cannot be sure. We cannot be sure whether this. We cannot take a confident trade based on this. Sorry for that. We cannot take a confident trade based on these statistics, on these percentages. So we have to wait for price, for sentiment to start tilting to our favor. Okay, so as I told you that these sessions are mostly to remind you that capital protection is not only using a small lot size. Capital protection is knowing when and when not to get in that trade. Capital protection is knowing when to get in that trade and when not to get in that trade. By the way, in those live sessions of mine over 30 or 40, you may have seen that I have taken trades in less than 20 live sessions. Okay, because not all the time is engagement time. Most of the time we are analyzing, planning, and keeping our money safe for when the setups are going to be easier to see and easy to spot and easy to get in and easy to ride. Okay, now the question remains, what is it going to take me to get in that market? So yesterday I was taken out. So what is it going to take me to go back into that market again? Okay, so for me, my bias is a buy. But because of the forex, of those sentiments in the markets, that is the forex sentiment, we dropped to the 15 minutes time frame. So price is currently reacting at this level. It's a very serious level of interest. Okay, so now unless what happens now, because still I don't want to use this level as a mark. So this is the kind of price action I say is not the best for us to but if it was able to break this level and maybe give us a retest, then we could find our way around. If not, we can always come back during the New York session. But don't forget that our sentiments, these are sentiment here. Our sentiments are here. I'm not sure that we have gold sentiments. Very nice. We have gold. Do we have gold sentiments? How come we don't have gold sentiment? Oh. Alright, we also have a gold sentiment here. So this gold sentiment says that 40% of traders are short, and 60% of traders are long. So does this mean we are shorting? Hmm? Hmm? Remember, even on gold, we have already broken this significant level. So broken previous highs. So does gold want to come back and retest this level? Because it could do that easily if it wanted to. Okay? It could do that. So right now, I am on something called hands off or risk off. So my risk is off. So this level is also not very appealing to me, and I'm not ready to risk at that level. So we have US30 here, and yesterday our anticipation was that US30 was going to get to these levels, but US30 never got to these levels, despite being an NFP day. We never had that entry at 49,500. I wanted price to get 49,500, but it failed. It never got to 49,500. So now, when you're in a state of confusion, you don't try to engage, because remember, there are days when we get into the markets easily and then we come out easily. Okay? In fact, I've begun to think that being a swing trader is better, because when you are swinging, it is possible to get a long move. So I'm thinking of being a hybrid trader, that is both a intraday trader and a swing trader. The good thing about intraday trading is that it provides you with a lot of setups. You'll get many setups. And intraday trading and the swing trading on the other hand, swing trading will provide you with many pips, beautiful many pips, as long as you are patient enough to hold your win. So now, right now, I will not conclusively tell you that I have a very strong bias for entry, or I have a lot of confidence for entry. So this is GBPUSD. So this is Euro USD. So Euro USD price was unable to break above. So now right now we are on Euro USD. Euro USD or Euro dollar %60 of traders are short, while 39 are long. So at least this pair has provided us with better conditions, so, or better price action. So this will be a good, will be a possible trade for today. That is Euro USD. So if 61% of people are short and 39% of people are long, I also want to be in the group that is long. Okay? I want to be in that group where people are going long. Remember, using the concepts I have been using to analyze the markets, my bias on euro dollar, pound dollar, or euro USD and GBPUSD, my bias has been a buy. Okay, so the simple confirmation we can wait for right now on euro dollar is only 10 pips. So when price is able to break that level, we can indeed find entries to the buy side. Also, if you look keenly, in the morning we formed a very clean accumulation, then we formed a manipulation, and then now it seems like we are distributing. So right now we are distributing. So accumulating, then we manipulate, then we distribute. What about the 4-hour time frame? So the ideal or the best analysis for today morning is simple and straightforward. Originally, we wanted price to come and break this level yesterday. It tried, but it was unable to withstand or to withhold that level. So it was pushed down here. So now the only thing we can do, and I recommend you to do, is maybe wait for price to break above this level, then take a buy. So it will be like returning to the original direction of Euro USD, because we were on a buy from Monday, okay? But from Tuesday, Wednesday, there was consolidation up to NFP. So I will stake my money on Euro USD, because at least Euro USD looks a bit organized. But we'll have to get that confirmation first before we go in. So what do you think about this market right now? Still, if you don't want to take it, in fact the best will be to wait for price to get to that level, break that level, then do what you got to do. Alright, in the weekly time frame, if you check well in the weekly time frame, so now we are moving into the weekly time frame now. So this is all liquidity here. Imagine. That is why I'm wondering, why is price behaving the way it's behaving? So price has more ability to get to a buy rather than a sell on the long term. Okay? So these are levels of liquidity which have not yet been tested, but price is wants to get to those levels. Okay? That is why I am maintaining a buy on my position. I'm not in any position right now, but I have a strong bias towards a buy. So we are going to be patient enough and see whether price is going to get to our marked level, give us an entry, a better entry for us to continue buying. But if not, we will abandon the idea we'll abandon that idea and wait for price to do what? To break these levels. So if price is able to break these levels, our next stop will be to our weekly open. So our weekly open so sometimes the bias is very clear, the trade is very easy, but sometimes you start wondering, am I even aware? Do I even know what I am doing exactly? That is trading in a nutshell. So no trades taken yet. We are waiting, we are anticipating, and we wish that the market is going to give us what it should give us in due time. So I'm looking to take a buy position on GBPUSD, on Euro USD, and on GBPUSD, and then sell USD card. So GBPUSD is moving the same as Euro USD, but the only time we shall engage is when this Asian high is taken out. So this is the Asian high. So when the Asian high is swept, it is our responsibility to go in after we find a good entry, a better entry. But if you look closely on Euro USD, this was a BOS, or what we call a break of market structure. In the 15 minutes time frame. So that is why my bias on Euro USD is a bit stronger than GBP USD. Normally the two have to have the same, they should be correlating or moving the same. But as we have seen from the sentiment, they are not moving the same. So why would I risk on one bad pair just because I trade that pair oftenly? Okay? So Euro USD is going to break our Asian high. And the funny thing is that you can never know a bad trade and a good trade, because so unless you take that risk, how will you ever know that this was a good trade? Okay? So I am anticipating that once we break that Asian high, which is indicated there, that we are going to find our way to the top. To at least 40 pips by the end of today. If not, price should just come and break this London's low, which was formed at 9:30, and then when it has formed the London low, when it takes out the London low, we shall close below, and then we shall form what we call a what? A trend continuation move. So we shall form what is called a trend continuation move. So when price closes below, we shall look for a trend continuation move through price retest. So price will have to retest, then it will give us an order block to get a bearish order block to get in. But I hope you understand what I'm telling you, that right now my bias is a buy, and I would like to keep that bias unless something happens. So price is moving sharp to our Asian high. Let me enlarge this for you to see. So price is moving to our Asian high, and we have said that once our Asian high, so this is our Asian high, once price breaks above our Asian high and then comes back for a retest, we are bound to get in for a buy signal. I know waiting is a lot of work. I know waiting sometimes makes us do or makes us take trades on impulse, because we are waiting, we have waited with no results. But I can assure you that waiting is never the wrong idea. Waiting can never be the wrong idea, my friends. Is it always tough waiting sometimes? Yes, it is tough waiting sometimes, but it has proven to be more useful over the years. So we are moving steadily towards our target. How many pips are these since New York Open? So mostly I'm going to wait for my setups to occur during the first 2 hours of the market. So from 9 to 10, and then 10 to 11, maybe 11 to 11, maybe 11 to 12. But if I miss my trades during any of that time, I avoid going back into the markets until I have a bias, or until during the New York session now. So if we fail to get into any trade right now, best believe that during the New York session we will be getting in. So we are still pushing slowly by slowly. Most of the people have left by now. So if you have any question, you can drop it in the comments. So basically, all our analysis is usually the same, doing the same thing over and over and over and over and over and over. Okay, so it's we just keep on repeating the same things over and over and over. The good thing about the market is that is the uncertainty part. So whereas the market may be uncertain, at least we know for sure we are going to meet the same things in the market every day, as long as we keep showing up every day. Okay. We are moving small and steady, slow and steady, slow and steady. So we are going slow, and then we are also going steady. That is price. Price is going slow and steady. You see, this is a good thing about not getting into useless trades or bad trades before you get a confirmation that price price can turn back on you anytime. What's happening on GBPUSD right now? So if you have been in my previous sessions, USD card, so USD card if you look keenly at USD card, so this is USD card. So if you look keenly at USD card, we had said that, or we had found out that it had broken these very serious levels which were lows of last year. So this first low here, I don't know if you can see this first low. So this first low here was formed on 16th June. This other low here was formed on 3rd June, and this other low was formed on 25th June. And price had never retested these levels until 29th January, when it closed below. Now, what happens is that, price came and retested this level. And then we got something called a second entry. And then from that point onwards, price has been selling, apart from now, the previous few days, or this week. This week has been very slow. So we are hoping, or we wish, that the price will get to this level, because that will be a very good signal. In fact, what I can do right now is even set an alert. So you can also set an alert on your phone, on your MT4, on your trading view. So because once price is able to break these levels, or this particular level here, then we have an ocean of pips all down here. So I don't know why the big banks are scared of selling. I don't know why. $1.3486. So 1.3486.4. Allah. How come I had not seen this? So what? Looking at USD card, we can see that price price closed below this level here, this OB, which it had formed during at 9 a.m. So it closed below with a very energetic candle on the 15 minutes time frame. And still we can see that clearly price hey you guys, me I'm going in for a sale. And also when you check keenly again, you'll see that price gave us a sweet spot entry, then it has come and closed below here, and then now what does forex sentiment say? Okay. So on USD card, 26% of traders are short, while 74 are long. So 26 are short, 74 are long. So what does this mean? If 26 are short and 74 are long, what does this mean for us? This means for us that's a straight sell. Why? Because always when taking sentiment trades, we want to be on the side of the minority. So the people who are trading, who are on the minority, that is where we want to be, because most retail traders are always wrong. So 90% of all traders are always wrong. Not they are wrong. That is, they are directionally wrong. Their bias is wrong. So if this pair is able to get to this level, these are 73 pips, my friends. And remember, last is it Tuesday? I told you that I wanted price to come to this level, retest a bit, and it has done that. But yesterday when it was breaking this high here, there was no entry. Well, there was an entry. There was an entry here. So this was the entry. So now we seem to have a better move today because price has already broken this it has created what we call the break of market structure. And when price creates a break of market structure, you just have to obey. Now, the only bad thing that will happen is if price starts behaving funnily the way it was behaving the other time. That is yesterday. Yesterday price was very funny, but I'm realizing maybe it was just going to collect more liquidity before we proceed to the upwards. And remember, if most of the retail traders are short, are long, then you as a retail trader should be going short. That is sentimental analysis. And if they are short or if they are long, you should be following the direction of the trend. So what does the trend say? And where is everyone going? So where everyone is going, you don't go there. You go where people are the minority. That is the most likely answer you are looking for. So what I'm thinking is that once we start buying for the euro dollar and then we start selling for USD card, it will be a very strong sell, and there will be possibly no entries to even get in on our desired entry. So we have to give price time to act on our. So it's 10, so 10 plus 5, 10 plus 30, 10 30. So it is 10:30, 10:35, but at least we are in profits. So we'll just wait for price to close above. Price. So where would our ideal take profit be for USD card? Where would our ideal take profit be for USD card? To say the truth, there's no, because listen, if you have strength, because this is what we are trying to summon this year now, energy and patience. If you have the patience, in fact you should hold up to this level here. So 3.4500. So price has refused to break that level apart from USD card. So since there is no much movement right now, the best thing would be to do one thing. The best thing is to come back during the New York session, because if we continue staying here waiting and waiting and waiting and waiting, at least USD card is moving, but it is moving very slowly. Okay, so once USD card is able to break, to continue with this same trend of a sell, okay, so we don't know whether it's going to come and retest here, but based on our fib is that USD card already has tagged us inside a sweet spot level. So this sweet spot level, you can see, which tagged us at around 930. Okay, now if price is able to maintain that momentum, okay, and also down here you can see that price has clearly closed below this level. So if it does that, then you, my friend, can be able to ride this pair all the way let me tell you one thing. There is no telling how far this position is going to go. So the first trick is to hold up to this level. Then after that level, we add more pair. We add more salt, or we add more pepper, or we add more positions. Then we shall hold up to that point. Now until that point, you can decide to take profit and continue with your journey. But down here we have more. Okay. So that is my analysis for today. But it is not to say that we are done yet. We are going to come back during the New York session to see whether prices have changed or what the hell is happening. So thank you for your time, and I hope to see you in the New York session.